Welcome to another episode of Behind the Journey podcast. Today we are honored to host a guest who is a financial coach, and today we are going to discuss debt management, investments, savings, and money market. Kindly subscribe to our YouTube channel, share, like. Karibu sana.
Thank you so much,
Behind the Journey podcast.
Thank you.
Kindly, for someone meeting for the first time, how can you introduce yourself?
Well, my name is Lilian.
Yes.
I'm a financial advisor.
Yes.
A financial coach.
Yes.
I do financial management.
Yes.
Personal financial management, group financial management.
Mm-hmm.
And I love my work.
Thank you so much.
Yes.
Now, Lilian, can you share with us briefly how you entered into this field of financial matters?
Well, just like any other person.
Yes.
After high school, after college,
Yeah.
you do a lot of stomaching,
Yes.
doing jobs here and there.
Mm-hmm.
And then, of course, finally, you have to settle for a job that you have to, that one job that you like, that you feel that you're comfortable at.
Yeah.
So I have done several jobs, but then at some point,
Mm-hmm.
I met this one uncle of mine,
Yes.
and he's a farmer.
Yeah.
So I was inquiring if I could get some job from him,
Yeah.
maybe selling farm products
Mhm.
or something like that.
Yeah.
And then he told me like he feels like I could thrive in sales and marketing,
Mm-hmm.
and he introduced me to one of the major companies dealing with financial management,
Yes.
and I found myself working,
Yeah.
thriving.
Yes.
7 years down the line,
Yeah.
and I love what I do,
Mm-hmm.
and here I am.
Wow.
Yeah.
Now, very fresh from school, life is beating you. You've tarmacked maybe. Now, what motivated you to work to join this space of finance and financial management?
Okay, I think the key thing that motivated me to joining here,
Yes.
because okay, you remember back in high school,
Mm-hmm.
everybody hated the this thing about sales and marketing.
Mm.
So everybody was like, ukisikia mambo ya sales and marketing, oh, that one is hard.
Yeah.
I also hated. I never even thought even one day I could do this.
Yeah.
But then I found that I have some potential. Before joining this, I did some personal business.
Mm.
I was selling some items, and I didn't have a shop.
Yeah.
And I found myself talking to people, and they could buy.
Mm.
So when I joined here, then I realized that after every time we go to school,
Mm-hmm.
we are taught how to make money,
Yeah.
but we are not taught how to manage the same money.
Sure.
So you go through a course, you become a doctor, you become a teacher,
Mm.
you go and make money,
Yeah.
fine.
Yeah.
But how do you manage the same?
Mm.
How do you utilize that money?
Yeah.
After getting the money, here is a pay slip, you're still young,
Mm.
then what next? So I found that there was a gap,
Mm.
and when I joined the financial institutions, I found out that there was a gap, there was a need for financial planning and financial management.
Yeah.
Yeah, because you could talk to people, and honestly speaking, someone gotten a pay slip, and all they know is just to pay bills, nothing else.
Yeah.
So I found it interesting,
Yeah.
and I found there was a big need to educate people.
Yeah.
And I started, and things flew.
Amen.
Yes.
More grace upon you.
Yeah.
Now,
Thank you.
straight to the point about money market, money market fund. Yeah, in a layman's language, can you please explain to our audience what is money market?
Okay. Money market fund
Yes.
is just a normal investment saving kind of an account.
Mm-hmm.
But now this time, money market earns interest.
Mm.
So as compared to other traditional kind of accounts, whereby maybe you have to save money, like kitambo people used to do savings in the houses,
Yeah.
under the mattress.
Yeah.
You save in normal bank accounts, but then there is no return. So you just putting your money there. But now, when you come to money market, you find out that money market will help you earn interest. So as compared to other accounts, a money market has higher interest as compared to those ones. So even in banks, you could find some accounts that are earning interest, but money market has higher interest. And it also drives in lump sum amounts. And also the flexibility of micro saving. You can do small amounts as compared to other accounts. So majorly money market is about the interest. So you invest to earn interest.
Thank you. I hope our viewers are benefiting from this conversation. Now, for a beginner who has never invested in money market, what's the minimum amount of money that he or she can start with?
Okay, in money market, investment amount differs depending with the institutions. Different companies have different amounts, but majorly most of the companies will accept a minimum of 1,000 to start with, and a top up of 100 shillings. So with as little as 100 shillings, you can be able to start your money market account.
Wow.
Yeah.
Little as 200 shillings.
100 shillings.
100 shillings.
Yes.
Wow.
Yes.
I think I'll start today. You can also start today.
Please
now,
do.
Thank you so much. You'll guide us from. You will guide me from this after this conversation.
Yes.
Now, what are some of the risks that are associated with money market funds?
Okay. Well, I think the only risk about money market funds is on interest. And because money market works or relies on the market performance. So most of the times, the interest rate keeps on fluctuating. So today we could be talking about 13%. Tomorrow we are talking about 12%. The other day we are talking about 15%. Another time there is 10%. So I think that is the major risk on money market. But again, it's not so high, such kind of a risk, because again, you're not losing anything. It's only that it's not fixed kind of you can't determine the interest you're going to earn, because it will keep on changing. The other risk maybe could be on liquidity, but this one is rare. Maybe depending on the investment security. They could go broke or maybe delayed payment, but that one is quite rare. So the major one is on interest and the fact that it keeps on changing.
Thank you so much.
Yes.
Now, for an ordinary Kenyan who is earning maybe 30,000 shillings, what's the realistic starting point, maybe amount of money that he or she can start with to save it, to invest in money market fund?
Okay. Let's not just look at money market fund, because saving and investment is wide. You could save in money market, you could save in your bank, you could do different kind of channel. There are different kind of, different channels of investment and savings. So not just for that one person who has a low income, even for a person who has a high income. I would like to answer that question by using a rule. A rule we call 50-30-20 rule. So this rule operates on how you're supposed to manage your funds, like how you're supposed to manage your salary. So at the end of the month you have this amount of money. So how do you know how you're supposed to manage? So using the 50-30-20%, 50-30-20 rule, 50% of your income should go to the basic needs, things like housing, foods, utilities, the normal basic needs that are must. Then the 30% should go to your entertainment, hobbies. As much as you're working, we say that work without play
makes Jack a dull boy.
Thank you. So as much as you work, as much as you're in business, then you should know, you should give yourself time. You should allow yourself for some entertainment. You should go for vacations. At times you look at people going for vacations and others will be talking like it's a bad thing or they are wasting money. Vacations are good for your information as long as they are planned for. And they belong to the 30%. Then the 20% should go to your savings, investment, debt management. So depending with how much you earn, now you're supposed to sit down with your payslip.
Yeah.
And then take the 50%, put it where it belongs. Take the 30%, put it where it belongs.
Yeah.
Take the 20%, put it where it belongs. If you do that, you'll find yourself having a smooth kind of financial management.
Yeah.
Otherwise, the biggest mistake that we make is getting our pay slips, and you find that you are living maybe in a house, you're paying more rent than you're actually supposed to pay. So the amount that is supposed to be going to savings and investments inaingia kwa rent. So you'll find that maybe, Brian, you're living in a 20,000 rent.
Yeah.
But looking at your pay slip, you are actually supposed to live in a 10,000 rent house.
Yes, I am a Luo. I must live. We will live once, YOLO.
But that is wrong. Financially, that is a big mistake. Financially,
yes.
You're supposed, if you want to make it, if you want to manage finances, you know what happens when now you start living like that? You're saying it's good to be a Luo.
Yeah.
If you have the money, go ahead and live it.
Yeah.
You know, yeah. It's not bad to live in whatever kind of
lifestyle,
mansion lifestyle you like, as long as you have the money and you have managed the money.
Yeah.
So don't just say I am a Luo, I am what, and then you go and live in a mansion paying 50,000 and you have a salary of 70,000.
Yeah.
You see, that is not making sense.
Sure.
So if you do that, you will miss on the investment part.
Yeah.
And then you'll come to realize that when it is too late.
Yeah.
Maybe right now you could be a bachelor, yes?
Yeah.
You have the money. That's why I talked about the need to know about financial management, because when you leave school and you have a pay slip and you don't have accountabilities, you tend to feel like life is for the living. So you spend a lot of money on entertainment, on sherehe thing, and then when it comes to Brian getting a family, then that's where you hit the road. Yeah. Because now you realize that you have spent a lot of money. Here is the family. The money you'd have saved some money that would have come through when you have a family, and now you miss the point. Yeah. So the 50-30-20 rule. Yeah. It will help on everyone, earning a payslip or even in business, because even those people who are in business, you do business, you get the profits, you pay the bills, and then of course there's something that you need to pay. You pay yourself. And every time, maybe if I could advise those people who are in business, you should always learn to pay yourself. Okay. So because sometimes you see those people who are employed, you have a pay slip. So your employer pays you. But when you're in business, there's no one who is paying you. So unless you plan to pay yourself, then you'll miss the point. You'll just be doing business and you're doing nothing for yourself.
Wow.
Yeah.
Our viewers, the rule is 50-30-20 rule. Tuanze leo, tusichelewe. It's never too late. It's never too early. Tuanze leo. Ukitaka number ya our financial advisor, I'll give you kindly. Just inbox me and then I'll give you. As we move, Lilian, do you think financial literacy should be taught in schools?
Yeah, okay. I think it should be. Because as I said, we are taught how to make money, but not how to manage finances. And we miss it. And honestly speaking, even if you'd go doing some research to maybe parents who have educated, they will tell you where kids have missed their points. Because if you don't have self-discipline, if you have not received any knowledge, and by the way, this knowledge on financial matters is highly dismissed, because you'll find someone telling you like, pesa ni yangu, natumia vile nataka, but it's just lack of knowledge. So by the time you're realizing that you have spent the money in sherehe, the money that you should have invested when you're still very young, now when you're 40, you're struggling to build a home that you should have built even at 30 if you managed your finances well. So I think there should be a lesson or a topic on financial management in school, so that when you're leaving school after college, you're taught like, yes, go and make money, but after making money, can they get someone, at least even if it's a financial coach,
Yeah.
on maybe graduation days or prior, to
Yeah.
coach them on how do you go about your money after
Yeah.
you receive it.
Sure.
So I think
sure.
it is important.
Yeah.
Yeah.
Now, after you've become maybe a doctor or a physician, so you will be taught how to manage your finances.
Yeah, be taught how to manage finances, because most of the times
Yes.
we think that we know how to manage finances.
We just assume.
Yes, you assume.
Yeah.
But you find that you do not know.
Yeah.
Kwanza hapo kwa rent, people miss it a lot.
A lot. Yeah.
A lot.
Yeah.
Because you want to live lavishly.
Yeah.
And you spend so much on rent, you forget on saving.
Yeah.
Rarely do you see people saving. Kwanza, discipline saving, people miss it. Young generation miss it. You realize about savings after you have grown a little bit. Yeah. Now, when you're starting a family, that's when you realize, well, I have kids now, they need to go to school. That's when you realize, like, you have a family that maybe it's important to have a health insurance or something.
Yeah.
So, yeah, it is important.
Thank you. So, please, can you explain to us the concept of emergency fund and why is it crucial? Why is it crucial?
Okay. An emergency fund.
Yes.
I believe an emergency fund is a pool of money set aside for the sake of unforeseen circumstances or events. Yeah, cases like death, injuries, sickness. Those are kind of emergencies that may come along the way. Yeah. And if you rely on your pay slip, sometimes it might get you off guard.
Sure.
So it is good to have some amount of money somewhere. Like maybe you could go for a money market fund. Yeah. Put aside some money every month, every day, every week for an emergency. Yeah. And I always tell my clients, like an emergency is not a must that it is a bad thing. Yeah. Yeah. There are so many things happening around. Like today, you wake up and find yourself in a group. Yeah. And maybe it is a close friend. Manage your social circle. You know, you need to give something to that friend of yours. Yeah. Or sometimes back at home, because where we've been brought up, we have churches where we went to for those people who are brought up in shags. So at times unaweza itwa harambe. Yeah. Na hiyo inaweza kuja kama hujajipanga. So if you have an emergency kind of a fund, you'd pick some amount of money there and you'll not be stressing and struggling to give your friends to changa in those WhatsApp groups that we always find ourselves there. Yes. You could even lose a family. Yeah. Because sana these emergencies are normally seen in terms of sickness and death. That is where you'll have to part with a lot of money. Yeah. So when you have an emergency fund, you will not have stress, you will not struggle, because you just pick a little and work with it. Yeah. Yeah. So even when you have kids, you have a family, you know, kids most of the times they want this, daddy I want this, mom I want this, and maybe you have not planned for it, and they will really push you. Yeah. So if you have an emergency fund, you can be like, let me pick a little here, and then I sort this one out. Yeah. Yes. Thank you so much.
Now, there's a day I was reading a book, and then I met a concept called group economics. Please, I will explain to our audience what is group economics. I don't know group economics or group economics. Something like that.
I believe you're trying to talk about growing each other in groups. Yeah. 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 Or better still, like promoting one of your own. Yeah. Like for example, maybe Brian, you have a business. Yeah. You sell shoes. Yes. Lilian has a business. She's selling food stuff. Yes. So me, I'll come buy shoes from you. Yeah. You, Brian, you're supposed to come buy food stuff from me. Exactly. And if we have that kind of a group promoting each other, then we also, that social circle, we also grow our economy. Yeah. A lot. Yeah. Because why should I leave tomatoes at my doorstep and then go to Gikomba to buy? You know, sometimes we just miss the point. because without you knowing, your neighbor at doorstep could be the one helping you tomorrow.
Yeah.
The person at the supermarket does not even know you.
Sure.
So I'm not saying it is bad to purchase things from the so-called and supermarkets, but where possible, it is good to promote one of your own.
Yeah.
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 And if we embrace that, like the Indians and Muslims do, I find them doing it so well because they only buy things at their own.
Yeah.
Yeah. So this one is selling shoes, you buy there. The other one is selling clothes, you go buy from them. So I think we should. It is a good thing.
Yeah.
We embrace the same thing, especially Christians.
Yes.
We miss that point a lot.
Yeah.
Yeah. So you feel like maybe because your neighbor is selling these, you think that by buying from them, you're making them rich without knowing you're growing them, you're growing the economy, and you're also growing yourself and helping yourself at the same time because you never know what that neighbor could be of help tomorrow.
Yeah.
Yes.
No. Connecting, I just connected that your point to there was a conversation in social on X that kuna mtu alikuwa anafanya harusi and then rafiki yake ni photographer, so akam-add kwa WhatsApp group so that amsupport kutoka pesa ya harusi. So huyo photographer akamwambia mwenye anafanya harusi, please give me your kazi ya photography and then I'll give you a discount because we are friends.
Yes.
But huyo mwenye harusi alikataa kumpa jamaa kazi ya photography and videography, aka outsource from another person. So huyu jamaa wa photographer alikasirika, akaleta both cause akajiuliza, unataka nikusupport kutenga pesa ya harusi na wewe unipea kazi, unataka nipate pesa wapi?
That's ironic. I would also do the same.
Sure.
Yeah.
No. What are some of the common mistakes that people do while investing?
Okay, the major common mistake that people do while investing is lack of clear goals.
Yeah.
So you start an investment saving plan, but you don't have a goal for the same.
Yeah.
So you are just saving, but you have not planned, or you don't really know what you're saving for.
Yeah.
So before you even start saving and investing, it is good to have a goal. Like what am I investing for? Why am I investing? What do I want to achieve?
Yes.
Yeah. The other common mistake that is made is by not having sufficient research on where you should invest your money. You should do proper research. Don't just invest for the sake of investing. Get to know if you want to invest in money market. What is money market about? What does it offer? Does it have taxes? Are there fees? Which company is giving the best rates? Why are they giving these rates? So it's good to do research. There's also another mistake that people do. I would say lack of patience. Because at times you would start out, like now I would give you a saving plan, and maybe I give you a 5-year term. And then down the line after 1 year, Brian, you've already given up. Like you lack
patience.
5 years maybe you were supposed to. You had a goal, a 5-year term goal. Like maybe you say after in those 5 years, maybe you need to purchase a plot, you need to buy a car, or maybe you need to start a family. And then along the way, you're like, you give up. Like it is taking too long. So you see, you miss the point. Because now, if you're not patient enough, you'll not achieve that goal. The other common mistake could be on maybe tax compliances. So you invest and you're not looking at, because most of the institutions or most of the investments, of course, they are taxable. So it is good to know. Don't just invest and you're not aware of the taxes that are involved. Then they take on following crowds. Like we have had things to do with pyramid schemes. So you hear people are investing in pyramid scheme and you just follow the crowd without even knowing what this pyramid scheme is all about, who is the owner, what is it about, and someone just tells you it is making money, and you just follow. I'm not saying they are bad. There could be some of them are genuine, but it's good to understand. It's good to understand. Then there's also another mistake made when you're investing. Something we call investing with emotions, maybe out of fear or because you've seen, okay, out of emotions. Like I would give an example, right? Financial agents, especially in the insurance industry. So you'd find a lady like me, Lilian. I come to you selling a policy. I want to sell an education saving plan, an investment plan, and you look at Lilian and you're like, this girl is beautiful.
Yeah.
And so you'll be like, maybe by investing with her, I can woo her or win her heart.
Yeah.
You see? So you will start an investment plan because you want to woo Lilian.
Yeah, sure.
And then at the end of the day, Lilian is not there.
Yeah.
She's not even interested in your whatever things.
Yeah.
So along the way, you'll find that you have saved for 1 month, 2 months, 5 months. Lilian bado hapatika. Give up. You give up on that saving plan, so you have missed the point. You see?
Yeah, sure.
Yeah, so you should not save out of emotions.
Yeah.
Save because you know why you are saving.
Very true.
Yes.
Wow.
Those are some of the
Viewers,
mistakes. Yes.
Don't do that mistake kindly. My fellow men, don't do that mistake. Don't invest the emotions.
Yes.
That you see a salesperson who is a lady selling insurance, and then ameumbika kaumbwa, and then unataka umfurahishe, you will mess up your life.
Yes.
Take care. Thank you. Now we want to handle the elephant in the room. Deni.
Yeah.
Debt management. Please, can you help us distinguish between a good debt and a bad debt?
Okay. Thank you for that question.
Yes.
Because I think debts have been a problem in the financial industry on financial management.
Yeah.
Because I think, okay, debts are not bad. Because I think almost everybody has a debt, including our nation, including our president.
Yeah.
We have borrowed.
Yeah.
So borrowing is not really bad. But the reason or the why are you borrowing? So there are bad debts and good debts. So I would classify them like good debts. In my own opinion, a good debt is a debt that you borrow to do an investment that will earn in return, that will earn you something in return. A bad debt is borrowing maybe for entertainment and you're not achieving anything. So if you borrow maybe a plot, you're buying a plot somewhere, you have borrowed some money. So in the next like 3 years, of course that plot will have appreciated. So that is a good borrowing. It's a good debt. If you borrow to pay school fees, this is where parents miss it a lot. Most parents fail terribly because you're not supposed to borrow to educate your kids. Because there is no one time you'll go back to that school where you've been educating your kid and you tell the teacher, no, I've educated my child here for 10 years. I need some interest. You know, you've been a very faithful parent, paying school fees on time. Yet you had borrowed. So you borrowed from a bank or a SACCO. Once you borrow, pay back in interest. Sure. So you're paying school fees, you have borrowed, and you're still paying the interest. So that is a bad debt. So this is where now we come and tell you to do what? Have an education saving plan in place so that you avoid such kind of a borrowing, because that one will never reward you. It will never give you back. So that is a bad debt. Another bad debt is maybe taking a loan to buy household items. And that is also another bad mistake people do. You take a loan of 200,000, you go and get some very nice furnitures, and at the end of the day, you are in debt and the furnitures are not helping you. If it is not a must have those furnitures at the same time, or it's not a must for you to borrow, you can be patient enough. Account, save in your bank account, and buy something at a time. Say this month I'm buying a chair, a seat. This other month I'm buying a TV, and it is doable. Even when it comes to purchasing motor vehicles, it is not a must to find yourself in debt. If you're purchasing a car that is not going to give you back, because a car is a liability, and a big one for that matter. So if whatever you're buying that car, like whatever you'll be doing with that car is not giving back, then that's a bad debt. Borrowed. Taking them to and take them to some other schools, even public schools, because you will not die, or the kids doesn't mean that the kids will not learn from there. You can always take them back after you have managed yourself again. So you can shukisha your class, then pay the debts. If you have been taking meat every day, reduce the meat to 2 days, or even go without. You will not die by doing that. If you've been buying clothes every month, reduce the clothes. Whatever you have already is enough. You can use that for the time. Then you give yourself a timeline and say by the next 2 years I'll be done with the debt. So it is possible to get yourself out of debts and by reducing maybe your lifestyle. Unashuka kidogo, unalipa madeni, alafu unapanda. And it is very important to get out of debts, because debts will always get you in stress. You will always get stressed. Like this one is owing you, the bank is owing you. You might get auctioneers here and there. Na ni aibu sana. So it is important to get yourself out of debts. Ukubali, ushuke class. Upange, manage, talk to your family. If you have a wife, let them know this is what we have to do. Accept, heal, move on, pay debts, and go back to life. And it is possible to bounce back. Yes. Ukiachwa your partner that you are in debt, and then aseme hapa sitaka, alafu akuache, then I think that means that the partner was not there for love. Maybe they came because of what you have. And it is good even when you're doing your choosing. Be wise. Very true. Choose for love. Be very keen. Don't go for hips don't lie. And then when you go broke, they are away, they are out and running. Na ukiachwa achika pia. Uko mbele, ukirudi, they will either come back or you'll find another one. Yes.
Thank you so much. Now, all viewers, kindly don't take debt to do a wedding. Don't take debt to go and do a rural show. Kindly say for that, for anything you want to do, take your time and then do it. Thank you so much. I hope you are getting one thing or two from this conversation, and kindly ask your question, drop that question there, like, share, and invite your friends to get inspired. Now, what strategies can someone who is stuck in debt use to get maybe a suitable payment plan that will not leave him or her in financially drained?
I think the same thing that we have talked about on accepting. Kushuka class too.
Very true.
I think hiyo tu ndio inasaidia kabisa. Unashuka, you can even go back to shags and pay debts first. Then you come back. You can always bounce back. So I think the major strategy ya pay debts is by reducing your cost. Reducing your cost kabisa, so that whatever you have been spending a lot on, you now reduce it to now paying the debts. And it is just for a short time. 2-3 years will not cost you a lot. And you can always bounce back.
Thank you so much.
Now, how dangerous is the habit of borrowing to invest?
Well, it can be dangerous,
Yeah.
especially if you're borrowing without a clear goal. Again, like I said,
Yeah.
or without doing proper research
Yes.
on what you're investing on.
Yes.
Yeah, because just like we said I'm giving examples on pyramid scheme. There are many others, several others. So unaweza pata mtu, like you remember the example of the quail business. If you can remember the quail business, so many people borrowed to do the quail business, and then it terribly failed.
Yeah.
So you could find someone selling a land, a plot, taking a huge loan in a bank because of following crowd. Because these people are doing this, you take a loan, and that is very dangerous because you have not even researched about what quails are. So if you talk to someone who did an investment in quail business, they will tell you how bad it is to borrow to invest in a business that you have not done research for, or without you don't have clear goals. And another thing I would also say about borrowing to invest. At times, you find someone borrowing and loan ndio uendelee, ama unalipalipa na bank ndio wanakuambia you can do a top up, which is also again another mess. So the best thing when you're doing a project, be very sure. And if you had saved, that's why I always insist on savings, because if you had saved like say 1M today and you want to do a house, that is pure investment. You have not borrowed anybody. So you'll go and set up the foundation. Kuna mahali utafika. And now sasa ukishafika hapo, sasa hauna stress ati umeomba mtu pesa. So you can now go to your bank or your sacco and you borrow to finish that house maybe, or that project. So in that way, it will not leave you in bad debts. It will not leave you stressed, because maybe if you're doing a house, you'll have left the rental house too, and you've started staying in this house. So the amount of money you are using for rentals, you're already paying back the loan. So that helps a lot.
Wow. Now, maybe in the business, nataka ninunue nganya, 7 million, niko na milioni 5, niko na 7 milioni 5, sindio? So I like 2 million. Nikipana 8 milioni 5 kwa maybe kwa au wanauza hiyo gari, and then nibaki na balance milioni 2. So hii gari imechukua ikianza kuoperate kwa barabara, nipe the remaining balance. Is that a bad debt or a good debt?
I think that one is a good one, because you see already you have a starting capital. So the 5M you will get the nganya up and running, and so the amount of money you're getting as profit, you'll use it to pay for the balance, the loan. So it is it's also good to at least have a starting point. Don't just borrow from the scratch. Have something, and then you can use loans for top up, so that you don't mess yourself in debts. And debts are very bad. They get you in stress, depression.
Sure.
And even in the workplaces, most of the people you find in the workplace. So you're supposed to manage the debts by doing proper, having clear goals, doing proper research, and you will be good.
Wow.
Yes.
Now, many people are living paycheck to paycheck and surviving on mobile loans. What advice can you give them on how to come out of that debt cycle?
Well, I think think again, as I had said earlier, what is messing us up on the debt cycle and having mobile loans here and there is because of the living above your limits.
Yeah.
Living beyond what you earn, like maybe is doing something to please people, especially hiyo kitu ya kuplease watu mabeshte.
Yeah.
Inafanya watu wakope sana, because you want your friends to see that you live in a good house.
Yes.
You want your friends to see that you're doing designer clothes. You want your friends to see that you have the biggest TV in the estate, you know?
Unaniongelea sawa, kuniongelelea tu.
Kwanza wajaluo hapa watapata.
Kwanza kwa designer clothes.
Yeah. So imagine unapata uko na payslip ya 50k. So kwa sababu nataka kuplease mabeshte, mnataka muende ma road trip, unapata hapo ka 10,000 kameisha. Unarudi kwa nyumba bibi, unataka umngarishe na watoto wanaenda shule, wewe unataka ununue ka designer pale. You know, you want to do expensive foods. When others are doing kibandaski at work, you just want to go to Java. You know, and that one leads people to borrowing unnecessarily. So you find yourself always you're borrowing, you pay and borrow again, pay and borrow again. So I think the major thing is on this is sticking to your limits. Stick to your lane.
Now avoid mambo ya is the mobile apps, is loans mobile apps.
If you're earning 20,000, there's nothing you can do about it.
Sure.
Unless you look for a side hustle. If you want that lavish life.
Sure.
So that you can increase your income, so that you can enjoy life. But if your payslip is this money, don't overdo, stick to it. And with time, haujapandwa mahali.
Sure.
Today you could be earning 20,000, tomorrow you are earning 200,000, and the same life remains. The road trips hazitaisha, ma TV kubwa hata zinakuja. Unaweza nunua TV kikubwa saa hii, alafu ushaiangalia umenunua gari ama umeona gari nyingine hapo super
latest,
alafu kidogo 1 year down the line wanatoa design nyingine
ile imechapa sasa,
ile imechapa, like wow. Unahitaji, so vitu hazitawaisha.
Sure.
So let's learn to stick to our budgets.
So never borrow to satisfy your ego.
You don't prove a point. It's by the end of the day it will still come back to you. You're the one who will be left in regrets. You know, once you leave your friends, kama sasa mulikuwa mumeenda mahali sherehe, utatoka hapo muachane, wewe utarudi kwa nyumba yako pekee. Wewe ndio utaenda kupatana na mashida zako huko.
Kweli kabisa.
And you don't know, sometimes you follow friends and you don't know those friends what they are doing, or what they have in place. Maybe you, Brian, your parents walijipanga vizuri. Kama ni pale kwetu mlimani, maybe baba yangu yako na shamba la kahawa kubwa, na anatugawianga pesa, na wewe kwenyu hakuna, maybe you're the breadwinner, you see. And then you just follow Lilian. Tukienda hai kunaenda. You follow me, by the end of the day wewe utarudi kwako kulia, na mimi nitabaki niko sawa.
In home, but itabidi tuzoe. So how can someone manage debts while still trying to invest and save?
Okay, the same thing I would say, if it is possible, once you stick to your budget, or maybe you shook a class, ile pesa yenye ulikuwa unatumia hapo mingi una reduce, unaweza tumia ingine kulipa deni, na ingine unatumia kusave. Or if it is not enough, you can still first pay the debts, and then you come back to saving. So it all depends with how you're managing your debts and what are your debts, because you could be, we don't have the same kind of debts. So your debts are not my debts. So it is this one, I guess it's personal. It depends on how much debts or how can you pay, ama how you're paying the debts. Like maybe it's a loan in a bank, it has given you maybe an allowance of 4 years, 7 years to pay. There are others you have 1 month to pay. So you first clear the ones that are less as you continue paying those that have a long term. You start with the short term ones and then you pay the long term ones. Yes.
Wow, thank you.
that's all about debt management. Hope you're enjoying. Hope you are taking something there. Now we want to shift our conversation to about insurance and security. Now, what maybe a young profession, maybe a doctor or a teacher is a young profession. What a priority nini between health insurance, asset insurance and gani ingine? Kuna health,
kuna life insurance,
kuna between life, health and asset.
Yes.
Gani nafaa ape first priority?
Okay, I would say that all of them are there. We can put all of them as a priority, Brian, because you cannot tell me that health insurance is not a priority.
It is.
You cannot tell me that life insurance is not a priority.
It is.
Maybe when it comes to property, that one can maybe wait a little bit.
Yeah.
But things to do with life and health, because once you are alive, you're prone to sickness.
Yeah.
So as much as you're having a life cover, you could also get sick, and these things they are quite unpredictable. So I would urge my viewers to put in place, balance the two.
Yeah.
Have in place life insurance, and when you talk about life insurance, we are talking about things like education saving plans, watoto.
Yeah.
So as long as you're a parent, or you think that one day you'll become a parent,
yeah,
or you're educating, there's a need for you to have an education saving plan.
Yeah.
Because there will come a time when you will get overwhelmed. Maybe you have 2-3 kids, na maybe wamefuatana, huyu wako form 1, mwingine wako grade what, junior, baby, and especially the lower classes, they are quite expensive nowadays.
Yeah.
So once you find yourself overwhelmed, that is when you find yourself borrowing.
Yeah.
To pay school fees, and we have you think maybe your wife is pregnant, you should start saving for the kid, because you know they will go to school. And I always ask people and say that education is not an emergency. So most of the times, unless it's a case of a very vulnerable family, most of the time, Brian, if you call me for a harambe ya mtoto anaenda high school, I am likely not to attend. I'm likely not to give you anything. Yeah. Because it was not an emergency, Brian.
Negligence.
Yes. It is just like the same thing when you find you've gotten married, and then your wife gets pregnant, and you're very aware. In fact, within the first week of pregnancy, you're already aware as a man.
Yeah.
And then unasonga hiyo miezi yote 9. Alafu siku ya kujifungua ndio huyu hapa. Kupiga simu kila mahali, mabeshte, familia hatupumui, hatunataka tukulipie maternity.
Unatugonga vibaya.
Unataka tukulipie maternity 9 months down the line. It is not an emergency.
Yeah,
you knew.
Yeah.
You're supposed to start planning. So the same thing with education. You knew huyu mtoto atafika shule. So usikuje kusumbua watu hapa nje.
Sure.
Yeah. I have a colleague of mine who is always telling people, we have a circle, an in-house circle.
Yeah.
So when January comes, he goes shouting, mtu asikuja hapa nimsainie loan ya education ya shule. I will not sign.
Yeah.
Kama ni development, let ni sign. I will guarantee you on the development. But when you talk about education, ati nikusainie loan ya kusomesha mtoto, sita sign.
Wow.
Why? Because you should have had an education saving plan in place. Yeah. A circle is for development, it's not for loans.
Wow.
Yes.
I wish I knew this before.
It is never too late.
Okay, maybe before I get my second and third born, I'll put into practice that. I'll take maybe that education plan.
It is never too late, and especially to men.
Yeah.
You know, men, nyinyi ndio mnabebanga huo mzigo wa kulipa school fees.
Sure.
As ladies, as long as the man is there, school fees hainihusu, rent hainihusu. So if you don't plan yourself well, you'll find yourself borrowing and never developing. Because you'll borrow, na by the time ukizaa mtoto saa hii atamaliza university akiwa around 24-25 years. So imagine, Brian, you'll be borrowing for 25 years. You will never develop yourself.
Sure.
So it's good to be aware of that.
Wow, thank you. My dear viewers, there's something called education plan. Kindly if you have any question, just drop it there, and then I'll give it to the financial expert to give us more details about it, and then I can also give you her contacts. Thank you. As we move, how do insurance products tie into long-term financial stability and wealth creation?
Come again.
How do insurance products tie into long-term as financial stability and wealth creation?
Okay. I get your point. So insurance products come in hand because most of these, when you talk about insurance, that many people despise, and especially employers. So you find some institutions, we do actually almost free education on financial management. So we come to your company, Brian, you are the CEO, you are the HR, and when I mention that I work with an insurance company, you dismiss me without knowing that I am coming to help your employer, your employees, you know, and helping you too. So insurance products are good because they help us in risk management. So anytime you find agents, financial advisors coming to your doorstep, at least listen to them. Do not dismiss, because they always have something. They always have something important. Because you, in this, as long as you live, you will never fail to find yourself in risk. Even right now, hapa penye tuko kwa risk. You leaving your house coming here was a risk. Waking up in the morning going to work is a risk. We only look at risks like maybe you boarded a matatu, you're going to Kisumu. Sasa hapo ndo unaanza kuangalia huko mtu anaweza pata accident. Na hata ukiwa hapo kwa nyumba yako, you're facing a risk. So everything is about risking. So insurance helps in those risk management, especially when it comes to death, sickness, injuries. So they come in hand. Like now, risk management, for instance, if you take an education saving plan and God forbid something happens to you, it could be demise, could be disability, could be critical illness. Critical illness, you can get sick in a way that you're bedridden or you are incapacitated to work again, and doesn't mean now that your kids will stop learning. So you can imagine now you didn't have a disability has come and critical illness has come. What happens if your kids are going to a private school? They will drop. You'll take them to public. Even though that public school at times inaweza kuwa ngumu. So you will make your kids suffer for no good reason. So you see, an education saving plan comes in hand because as much as you're saving, you also have a life cover. This life cover ensures the breadwinner or the insured, the person paying for the policy, especially in this case parents, so that in case of demise, the policy in the insurance industry, when you start saving for an education saving plan, most of the policies, they will pay, the insurance pays for you the plan. If you are paying, for example, 10,000 per month and demise came, we will not go to the because you're the one who was paying. So what the insurance does, it pays the remaining part. If you had a 10-year term and you had saved for 1 year, they will pay for the 9 years. That means your kid will still go to school as planned. And they also pay a lump sum amount depending with the company you have invested in. They also pay a lump sum amount that will help boost either the family that you left behind or even you in your incapacity. You'll have some money to move on. Like to help you move, maybe to pay for your medicine and such things. Also risk management, like maybe in a case of a disease. So you find kwa job mtoto amegonjeka. If you had an insurance, a health insurance cover, I'm telling you, Brian, will not be stressed. You just call, even you can even call the teacher. Please peleka huyo mtoto hiyo siku hapo karibu. And nowadays things are so digital. They'll only ask for your service number your member number, provide your ID, you have smart access. So mahali popote huko, hata kama umeacha familia nyuma, they will get treated, even for yourself. And it's also good to do some health checkup annually, so that you can avoid magonjwa zingine zinakujanga and you like maybe at a later age. So it helps so much on risk management. I think that is the main thing on insurance, risk management. Yes.
Thank you. That's well explained, so deep. Now we want to talk about retirement and planning. Retirement planning. Now, ideally, what percentage of one's income should be directed to the retirement plan?
Okay, we go back to the 50-30-20 rule.
Yeah.
So on the 20%, that is where your investment, your savings comes in. So that is where your retirement should be in the 20%. So as much as you're saving, for example, if you're in business, nobody will come asking for your pension. For those who are employed and you have deductions, you have NHIF, those ones are deducted automatically. But if your employer has not initiated an SSF kind of a plan, a pension kind of, and it's also good where you're working to insist on the employer, before you even start working, please find out to know if they are giving you a pension plan. It is your money that will be deducted to help you in future. So mahali popote unafanya kazi, let your employer ask your employer, like, what do you have in force for me for retirement, So it is important to save for retirement. Even if you're in business, put something aside. Nowadays we have something we call NSSF Tier 1 and Tier 2. Where now Tier 1 goes to the government and Tier 2 is allowed to be invested in private sectors. So that you can always balance the two, so that when at retirement you'll be able to access some part of the retirement. When you talk about the government pension, NSSF, you've seen people suffering for long before they get their pension. But now when you invest in private sectors, at least the accessibility is easier. So always strive to have a pension plan, because that is what you eat. That is what you pay yourself after retirement, after work. You have worked for 30 years, for 40 years. What do you have to show? Do pension, save for your retirement. And after you've saved for retirement, after you get the money, what do you do with that money again? Because also there people miss the point. So you save for 30 years, and then at the end of the day, Brian, you're 70 years, you've gotten your pension. Sasa ndio unafikiria kuendea kina kinyi ati juu
umepata pension, umepata bonus ya majani chai.
Exactly. And you umeanza sherehe at that time
at 70 years.
Yes. Another mistake that people do with retirement money is starting a business at retirement. You see, you cannot be operating, you cannot be employed for 40 years and then at 65 ndio unafikiria kwenda kununua ile nganya ulikuwa unani. It might frustrate you because you have not been in that business. So I actually advise people to buy annuities. We have covers products we call annuities, whereby you invest your pension and that pension will be earning you some amount of money every month. So it will look like you have an income. Alternatively, you can invest that money in money market. She will give you interest at the end of the month. Because in money market works with compounding interest. It is per annum, but every month, every day your money earns something. So at the end of the month you have something. So you can have a lump sum amount of like maybe your pension of 5M, 10M, and then the interest earned, you can always withdraw the interest to act as your income. So it is very important to have a pension retirement plan.
Wow. Thank you so much. Now, from your experience as a financial coach, what are some of the common myths and misconceptions people have about a pension plan?
Well, sometimes watu unajua wanaongea sana and especially Christians hapa tu tunafiki sana.
Tunachia Mungu.
We trust in God and we say that God will provide. Kesho ni ya Mungu.
Kweli.
Kesho ni ya Mungu ni kweli, lakini unafaa ujipange na hiyo kesho. Because hata Mungu anatakanga mtu anajipanga. It is the same Bible that tells us that the Holy Spirit will help you how to make profits. Anakusaidia ku make profit ufanya nini nayo. So let us not have this concept of thinking that you don't need a retirement plan, ati sijui ukizeeka utasaidiwa na watoto. That is also another wrong misconception. You think that your kids will help you. So I always ask people, like now Brian, you're here, do you know what your mother ate yesterday?
No.
Do you know what she's eating today?
No.
Do you know what she will wake up for breakfast tomorrow?
I don't know.
Imagine the same thing will happen to you.
Na nilisomesha. Wacha nisomeshe mtoto wangu anisaidie.
Invest. Let me tell you mine. Utagongwa na butoa kwa sababu what goes around comes around. So what makes you think that ile kitu wewe unafanya sahi kwa wazazi wako haitakuhapenia? Like now, let me ask you a genuine question. When was the last time you sent some 10,000 to your mom na haikuwa ya dawa?
I can't remember.
A good question.
I can't remember,
and
honestly.
Even asking the viewers, when was your last time you sent some 10,000, 5,000 to your parents back at home and they had not asked for it? It was not for medicine. Because most of the time tunatumanga pesa nyumbani mama ni mgonjwa. Sijui ngombe zimefanya nini. Si unaona? The same thing will happen to you if you don't plan for retirement.
Sure.
You will be shocked, utazeekea huko. And that's why you see most of the times after retirement, people don't stay for long. You refuse to stay on earth and you go and stay down there 5x6 and 4x6.
I can't imagine.
Mara mingi inakuanga, imagine it's about finances.
Stress.
Because you did not plan well. So umekuwa ukiishi hapa Nairobi, retirement umekuja, you have nothing. You have to go back to Shags. Huko Shags ukienda, wale watu uliacha huko ulikuwa unaringia ukiwa na job wataki kukuona. Unaenda kwa mtaati kuongea na wazee wenzako, wanakunywa vitu zao hapo wakikuangalia. They will not even buy. So you'll get depressed, get stressed, and actually research imeonyesha mtu akiretire, watu wengi after retirement they are barely going for 5 years. 3 to 5 years you're done. Yes, because poor financial management, especially on retirement. And I always say that the retirement should start the first day of your employment. If you get employed today, that is the time you should start your retirement planning. Your pension planning. Even if you're 20 years, even if you're 25 years, and you have like 40 years to come, start planning for your retirement. The bigger the lump sum, the better for you. Usikubali kuenda ushavuka kufe huko mapema sana.
Very true.
Even you can have, it's not a must you start. Imagine you're 17 na unaanza kukimbizana na mabiashara huku. You're supposed to be relaxing. You're supposed to be playing golf. Niliona gari ingine imeandikwa how you're managing your life right now. Will determine whether you'll be playing golf or draft. So either utakuwa unaenda huko kwa mtaa kucheza draft ama utakuwa unaenda kucheza golf. Personally, I want to play golf.
It's a very emotional. Now, as we finish, you've been in this field for quite a long time. What's the common money mistake that people make today?
Common money mistake. I think we had reviewed on that. Spending money.
Kufurahisha watu, sindio?
Spending money for the wrong reasons. You know? Following crowd, you know, lack of proper research, kosa kuwa na clear goals. What else? Kukosa kuwa na hiyo knowledge too ya financial management. So it is also good when you get a job to search, to go reach out when you hear people are doing financial management. If some financial advisors are coming to your institution, don't lock your ears. Don't start operating your phone, because that is what mostly they do. You start eating stories na uko nyuma. Sababu you despise insurance agents so much. They are saying nothing. You know? At the end of the day, nikikuja niangalie pesa yako. Like, there's a question I always ask people. Like, today you have a pay slip. Let me ask you, because you are my viewer right now. My viewers on the camera may not answer this. It is not a must you answer, but it's a question.
Yes.
Like, you are employed, right? You have a pay slip. How long can your savings sustain you if you lost a job today? Hata usinijibu. If you lost your job today, if your business went down today, how long can your savings sustain you?
Sikujibu, si ndio?
Question mark.
Sitakujibu kwa leo.
Thank you.
Now, if you had one golden rule on money management that every Kenyan should live by, ni nini?
Well, I would advise everybody to seek financial literacy. Very important. The first time you get your paycheck, seek financial literacy. Get to know how to manage your finances, because once you know how to manage finances, you have dealt with almost every other problem. Actually today, 99%, actually almost 99.9% of the problems in most households, of the issues in most marriages, it's money related.
Sure.
And then I think maybe 1% is relationship. So ukienda huku nje kufanya research, kwa nini wewe uliachana na bwana yako?
Pesa.
Na wewe uliacha bibi kwa nini? Na wewe ulifanya nini? Why did you had a business, why did it go down? Ulikuwa na job. Kwa nini umefutwa kazi na you cannot sustain? It is money related.
Sure.
And that is because we don't know how to manage finances. So I would request that let everybody seek financial literacy. Usione kama ni upuzi, kama ni ufala watu wakikuja kwako mahali unafanya kazi kukuelezea about these things. And don't have a mind of thinking that money is going to get lost. We said that everything is about risking. Because you see those people who discourage you. Unaweza kuwa mahali mumesomeshwa, Brian, umesoma, unasema tunaenda kuanza saving plan. Alafu beshte yako hapo mwenye ajui kujipanga, mwenye tu hata hana kitu, ndiye anakudiscourage kwa sababu yeye hana kitu ya kusave, ama ameshajimes, anakuambia unajua hawa watu wa insurance wanakuanga waizi. Na si hajaibiwa. Anasema story ya kusikia na huko.
Sure.
Kusikia alisikia hajaibiwa, hana evidence. So alisikia tu story afu anaanza kuambia watu wengine. Na kuna watu kama hao, akina ninawaomba my viewers, kama wewe ni mmoja wao uache. Because your financial goals are not my financial goals.
Very true.
Your colleagues' financial goals are not these other one. Tumesema tumetoka different background. So don't listen to those naysayers. As long as you have done your proper research, go ahead and save. Go ahead and invest.
Wow.
So proper financial management, seek literacy.
Wow. Now, Lilian, what financial principle that you yourself have lived by that you could recommend to our audience?
Okay, I think it is just about saving.
Yes.
So for me, I have embraced savings and investment. However little it is. Because sometimes you might think that you have little to save. But I would say that there is no little money to save. If you're earning 10 shillings, save 1 shilling. If you're earning 100 shillings, save 10 shillings. So for me, I always take, this is my take, I always do 10%. See, we do 10% for our tithes. Of course, for those Christians who tithe. Because again, people have robbed God, they have robbed themselves.
Sure.
And it is also good to know the first thing what you do when you get your payslip. Unaona kama uko na payslip, si kama umeandikwa especially na gava. Wanakuja kama wamekata pesa zao.
Kila kitu
wewe unapata yako. So what do you do after you umepata? The first thing should be
pay tithe. Pay
God. That is 10%. If you're a Christian, you should not bargain about that.
Sure.
You should pay tithe 10%. What should be the next thing? You should pay yourself. The third thing, you should pay others. But what we do the vice versa. We start by paying others. Mepata pesa, landlord. Kenya Power, Nairobi Water. You have not done your tithe, you have not paid yourself, na pesa imeisha hivyo. So for me, I've embraced that one rule. Paying my tithe, paying myself. So anytime hata sasa Ibrahim ukinitumia thou, sisi kwa nimespect hiyo thou. At least hata kama nilikuwa na haja sana, I'll make sure I have saved 10% of that. Which is just 100 shillings.
Sure.
Put it in your money market. Anytime you get, I think it's a good thing to adapt. Anytime you get any amount of money, always make sure you have saved something.
Yeah.
For me, it is 10%.
Yeah.
So 10% for tithe, 10% for me.
Yeah.
That is on, forget about the 50, 30, 20.
Yeah.
This is on the monies that maybe I have not expected along the way, you see? Because especially if you're in business, you should always strive to make sure you have paid yourself some every day.
Yeah.
Save something. Yes.
Now, what's one financial mistake that you've ever made, and the lesson that and the lessons you learned from it?
Personally, I think since I started earning well, I don't think I have made a financial mistake so far, but maybe na hapo mbele mbele kitambo kabla nijijue vizuri, I used to spend a lot on clothing. Yeah, it's good to look good, but for me, okay, I think I didn't just have the knowledge, so I used to spend a lot on clothing. Isili ilikuwa imenijua vizuri. Nikiona hii design imetokea ndio huyo mimi. Kiatu ndio huyo mimi. But currently I'm able to live within my means. Like it's not a must I buy something kwa sababu iko na designer. I can use whatever I have. Or I'll have planned like sitanunua nguo kila mwezi ama kila siku. Ama sitanunua this thing because people are just buying. I'll have planned for it. So a mistake, I think maybe 10, but right now I think I'm well informed.
Wow, thank you so much.
Yes.
As we finish, please share with us a real life story that your financial advice or coaching changed someone's life.
Wow. I think I have several. And one of the major one that has motivated me a lot, I met this client in my field work. There were two. Just like I was telling you, when you have friends, some are naysayers, they discourage you. So I met these two men. We were sharing the same hotel in my field work. So in the morning, with my colleague, we realized that these men, it's like they're spending the same hotel. So we went and conversing, explaining ABCD. So this guy got interested in money market. So we explained. So the other one was like, me, I don't believe in these things, blah, blah. And this one guy bought the idea. And he started with just 1,000 shillings. Just 1,000. And he was like, I also kind of don't trust this thing so much, but let me just try it. So the guy started with 1,000. Kidogo kidogo nikaona naanza kutopa hapa 2,000. 5, 10, 50, 1 million.
Wow.
And by the end of the day, he invested enough to build up a flat. Right now, as you're speaking, from the money market account that he started with 1,000, he built up millions. I will not say how much, because he realized along the way he had money, but he didn't know how to manage the money. So he's an engineer, so he used to get, engineers, they will get money here and there, clients hapa kule. So unapata maybe leo amepata 100,000, kesho ako na 50, siku nyingine ako na 10, hivyo. So he was telling me like, me I could get money, but because I am too emotional and I have family, maybe leo nimepata 100 naona ni mingi, wacha nitumie kazini yangu. Tau 10. So nyumbani wanasema, hakuna sijui nini, ndio huyo ameshatuma ki50. So when he got to learn about money market, now he could get the 100,000 and save 80 or almost all of it. And today he calls me very happy. He has referred me to so many clients. Just the other day he called me and told me, I just want to buy you choma because my flats are now paying me back out of the money market. And I feel happy. I think that is one of the examples that make me feel very happy.
Thank you so much. At least you changed someone's life.
Exactly.
Now I understand you are in the financial field. It's a very busy field. How do you spend your free time, maybe?
Well, just like we said, work without play makes Jack a dull boy. I don't want to be a dull girl. So when I have free time, I love nature walk. I love road trips. I love vacations. So just go maybe swimming, take myself out somewhere, listen to some music, and it rejuvenates me and keeps me going. So yeah, as much as you're working, it's also good to refresh yourself. At times you can even go to the spa, take a massage, you know, scrub your body.
Very important. Yes.
Very important.
Yeah.
Space, you know.
Very important.
Ndio hapa umetafuta pesa, umeumwa na magoti na mgongo na pesa ni yako. Treat yourself.
Very true.
Treat yourself.
Kachoma hapa na pale.
Take time, go for a road trip alone. Just alone, thanking your God that you know with your maker. I had another lady on TikTok saying ameenda kujipeleka out yeye na Mungu. Wakae chini waongee. Sasa Mungu uliniumba aka katoto kazuri hivi nini, you know, and it was kind of funny, but it is very important.
It's making sense,
spend time alone. And rewind also inasaidia kupunguza stress. Yes.
Sure. Now, lastly, where can people find you if they want your financial advice services?
Okay. I have not invested so much on social media, but most of the times I do contact phone calls. So I can share my number. People, they can reach me out. For the purposes of financial management. Only.
Dear viewers, my fellow men, hii namba hii ya mistari, namba ya seeking mambo ya pesa.
Exactly.
Kindly proceed.
Yeah, so I am very soon I'll be sharing. I'll come back here again with my social handles. I'm starting a kind of a podcast as well on financial management. So I'll share later. But for now, my number is 0700 740 571. 0700 740 571. Lilian Karigi.
Thank you so much.
Ukinitafuta huko utanipata.
Asante sana.
Thank you so much,
Thank
Brian.
you for your time, Lilian. It's been wonderful having you in the podcast. Thank you for creating time out of your demanding time. I understand you are a very busy woman, but at least you created the time for the benefit of our viewers. Thank you so much. Your time is much appreciated. And our dear viewers, thank you for keeping in touch until this time. We've learned that about finance is not about how much you earn, but how you manage it. However small it is, or however big the amount is, but the thing is, how do you manage it in savings, investments, and planning for the retirement. Thank you so much. Kindly subscribe, share, like, and invite your friends to listen to this an inspiring conversation. Until next time, I'm Brian Omondi, host behind the Journey podcast. Thank you so much. Have a blessed night.